Okay. Good morning, everyone. My name is Adrian. I'm one of the founders of Rootstock. And we are going to have a panel about mining, continuing with Sergio's explanation about merge mining. That hopefully you understand or you understood something about it. It was quite complex, so don't worry. So we have today Vera, Guzman Pintos, and Fernando Grijalba. Ethan and Guzman are co-founders of Luxor, and Fernando is a Latin American regional director for Braiins, right? And they both run mining pools, right? So Luxor, it's a big honor to have all of them here today, as they are like two very important players in and actors in the Bitcoin mining industry. Luxor, correct me if I'm wrong, guys, is the second largest Bitcoin mining pool in North America, right? While Braiins, you probably know Braiins for its former name, which was Slash Pool. And correct me, Fernando, is the first ever Bitcoin mining pool that's ever existed since 2010, probably. So legends here from the Bitcoin mining industry. So thank you guys for being here. I have my cheat sheet of questions, and hopefully we can cover most of them. Okay, so I will start with questions about the mining business today. I guess it's a hot topic now because the bear market and everything that has happened. And actually these questions, I made them like a few days ago, so things got a bit worse. But one of the things that I find very interesting, and actually I've been talking with you, Guzman, and actually with Daniel from Braiins, that he's here, in the last few months, is trying to understand the economy and the business model of a mining pool. Especially, it's very interesting for me to understand that, so we can work to make Rootstock economically interesting for mining pools to do merge mining. Sergio has been talking about merge mining recently. So the first question for you is, how do you make money running a pool? Is it profitable to run a mining pool business today? I don't know. I want to start.
Yeah, I can take it. So mining pools are extremely hard because pretty much there's a lot of like other mining pool competitors like Braiins. There's Foundry. There's Chinese mining pools that have like all of like huge balance sheets. So they've been trying to when you have like too many competitors, you essentially are like crunching on fees, right? So the mining pool as the core business, it's usually kind of like really hard to run, and also requires a bunch of people, a bunch of like data engineers, servers, backend engineers to essentially operate a mining pool that needs to be active 24/7. Because if we are down even for like 5, 10, 20 minutes, that basically means that our miners cannot connect and they cannot get their rewards. So essentially they cannot make income either. And then how mining pools have been surviving over the last few years is adding other additional services on top of the mining pool. For us, the mining pool is kind of like entry door to the Luxor ecosystem, and then to all of our clients, we are offering them brokerage services to like buy and sell machines. We offer them like data packages. We help them with introductions to like hosting sites. We provide all sorts of like financial services as well. So that's kind of, you're essentially building an ecosystem around the mining pool where essentially you can cater to different type of miners.
I just want to build on that a little bit. So, and kind of relating back to some of the merge mining discussions, when you go into a mining pool pitch as a business development person, you're pitching to a mining farm operator for them to send their hash rate to your mining pool. And the name of the game is get as much hash rate on your pool as possible. The number one priority for those miners is profitability. And so the first thing they ask you as a mining pool is, what is your fee? And so as a mining pool, you get compressed on those fees because you have to compete, as Guzman mentioned. And so things like merge mining are additional ways to pay out miners additional reward and kind of compete on that profitability line, which is the number one issue for all miners.
What about Braiins, Fernando? Because Guzman was telling about Luxor, and they are like diversifying offering for their clients, not only the mining pool product. What's the case for Braiins?
So when we first start with the mining pool is profitable. We actually mine 1,300,000 bitcoins already, but it's not profitable like it used to be. So as Guzman well said, we have to build an ecosystem around the pool. So the pool is kind of the hook for bringing miners. So we in Braiins, we invest actually all the Bitcoin mining in our pool to give more security to the Bitcoin network and to the Bitcoin miners. Continue developing our firmware, which is our third product, all based on open source, because we consider as Bitcoin stakeholders and we want to back up Bitcoin as much as possible. So this is why all our products are open source.
Cool. So continuing the line of the Bitcoin mining business, we have seen some not that nice news lately in the media about big miners, especially in the US, having some financial and economic problems. Have a couple of examples. Argo, which failed to do a fundraise, if I'm not wrong. Core Scientific, also a big miner in North America that's exploring bankruptcy due to its financial situation. From your perspective, how do you think this can impact your business and the Bitcoin mining industry in general?
I think these cycles in mining are nothing new. The past few bear and bull markets, we've seen similar situations play out. There's two main differences in my mind with this cycle. First, there's a lot of media attention. Now mining is making headlines in Wall Street Journal, Bloomberg, Financial Times, every press. So there's a huge spotlight on the industry. Second would be the amount of capital that's involved. In previous cycles, we didn't have so much financing coming in through debt markets, capital markets, a lot of public companies, and so that's really kind of made the situation a lot bigger and kind of put us to where we are today. I think it's important for the ecosystem to kind of heal from some of the over leverage and excess risk taking that it took this past cycle, especially in 2021. So I don't think it's necessarily a bad thing, and if anything, it'll kind of help miners think through the risk profile of their businesses so that they can become more defensible in a very highly cyclical industry. So things like hedging is very important, especially on their energy costs, which is the number one input for miners. Hedging hash rate, which we have a new product for on their revenue side, and certainly good treasury management, not getting too over-levered, making sure their debt balance is maintainable. So while it is painful in the short term, I think we'll emerge from this stronger as a network.
So I want to add a little more on that topic. Institutional miners and the biggest miners in the industry made their operation base in a bull market. So now they are running into a lot of trouble because they don't prepare for bear market instead. So this for us is a great time because it's time to build, and our products can help the miners, for example, in terms of efficiency or mining security, like our firmware do. So for us is kind of our summer. Because we have a lot of new people preparing for the next bear market with us. So now I think it's like the time for construct for the next bull market.
Yeah, and also what's different about this kind of the current scenario is that we have like a double crunch. The first one is on the revenue side, hash price, which is miners' revenue, is all-time low. So right now we are like $60 per petahash per day. So that basically means if you have like 10 miners, you're essentially making $60 on all of them. So on the revenue side, we are like miners are essentially making way less money than they were making before. And then on their operating cost, over the last, I would say like North American summer and also in Europe, electricity costs have like increased pretty much like doubled overnight for most miners. So like miners are seeing a scenario in which their revenue is an all-time low and also their operating expenses, mainly electricity, is an all-time high. So that's kind of like causing that like double crunch and tightening miners' margins.
So you say that mining profitability is probably at its lowest in the last few years, right? However, one thing that is noticeable to me is that recently we had an all-time high in hashing power. If I'm not wrong, more than 300 exahashes per second, while the mining profitability is at its lowest in the last 2 years. Why is this happening?
Yeah, one of the main reasons is because building mining farms is hard. And then, so all of these decisions to deploy capital and essentially increase all of the operations hash rate, these decisions were taken maybe 12 months ago when Bitcoin was like an all-time high. So all of these machines, all of the infrastructure was already paid. And since mining, although it's still profitable in most cases, essentially miners have all of these machines getting shipped to them. It's essentially time to plug them in. There's no reason not to plug them in if you can still make a little bit of money, although maybe not the return that you were expecting when you were making your Excel financial model like 12 months ago. Most of these miners were thinking they were going to ROI like within 12 months or so, and now that payback period is completely different. But yeah, that's the reason why hash rate keeps increasing. It's because these financial decisions to deploy more capital were made 12 plus months ago, and then all of the build out essentially happened throughout these months.
So you mean that all those farms are still up and running, while the profitability is low, it's still like positive?
Yeah, essentially miners buying the top and selling the bottom.
So related to that question, this is actually something that Gabriel there in the audience suggested asking, because he has a very particular view of the world, but basically his thinking is that we have now governments mining Bitcoin, and that's why probably we have had the all-time high for hash rate. Do you have any opinion on that? I mean, governments mining Bitcoin, is that something that we can see happening?
Yeah, I think in terms of public announcements, there's been very little. So it could be a theory that there are governments mining at scale, and certainly there's been some announcements. For example, we helped the city of Fort Worth, which is one of the largest cities in the U.S., start mining at their city hall, and there's been news that El Salvador will set up some mining operations as well, but publicly there hasn't been a lot of announcements, although kind of in private channels we have heard of different involvements of governments such as China and Russia in mining previously. So definitely a possibility, but I guess to be confirmed.
Cool. So let's move to another topic now. I remember back in 2016, there was one of the first Labit conference that was held here in Buenos Aires. There was a mining pool, and I remember we had people from Endpool, BTCC, right? Which I think it's not working anymore. But there was a lot of Chinese pools present back in the day. Now we have you guys here, so you are clearly not Chinese. But back in the day, there was like, if I'm not wrong, around 70% of the Bitcoin hash rate that was produced in China. And that changed after the China ban, right? A lot of those operations have moved to the US, right? So the question for you guys is, are we facing a similar risk where the hash rate is now concentrated in the US?
So I think the only risk that miners in the US will face is if the regulation come to them and they can start to affect the Bitcoin network if more of the 15% of the hash rate is held in North America. I think it's pretty much the only risk. I don't know if you guys have any other.
Yeah, I would tend to agree that we are kind of in a similar scenario as a few years back with all of the hash rate in China, but there's some like nuance to that statement, which is that the US is kind of like a federal government, right? So you have kind of like different states that have a lot of power within each, like within the state itself, and then can fight against like federal regulation. That's not something that you can do in China, right? Where the central government will essentially dictate what happens across the entire country. So in the US, there might be regulation that applies to, for example, the Washington state, but doesn't apply to Texas. Or if there's a federal regulation that tries to, I don't know, ban mining, or, I don't know, try to censor transactions or whatever, the local governments can like fight back against that. And then also what we learned from China is that miners will be able to pick up shop and relocate somewhere else very, very quickly. So in that sense, if the US were to like ban Bitcoin mining, all of those miners could go to like other countries like Paraguay. There's a bunch of mining happening in like the Middle East, like Dubai, Kazakhstan, and Russia as well. So there's other places where like miners can essentially migrate and move their equipment to.
Yeah, I think Guzman's point there is pretty important, that Bitcoin is anti-fragile. So while it's important for us to encourage decentralization, it's really, I don't think, a huge attack vector. Although there are two areas of FUD I see in this. One is on the miner itself level, and we kind of saw that with the China hash rate, where people say, you know, the network's controlled by the Chinese. And so I do think that's important for us to spread out hash rate from the actual mining farms globally. And really excited about the stuff happening in Latin America, and one of the reasons we're down here. So that's important on the miner level. And then the second would be the mining pool level. And we saw that a lot with the Ethereum merge, is people are pointing towards the Bitcoin network and saying, hey, well, Foundry and Bitmain and a few others control over 50% of the network. And so distributing hash power through the mining pools is also important. Having 10 to 15 large pools that are all contributing independent and not collaborating within each other. Running a mining pool business is incredibly hard, and Braiins and Luxor have been trying to help support the industry by providing diversification from the main Chinese mining pools and Foundry.
So related to that, I guess that a lot of miners have been set up in the States because probably it's the easiest place to set up an operation, right? I guess because of infrastructure, because of capital markets, probably. You mentioned a few things about Latin America. What needs to happen for Latin America to become a place for miners to set up mine operations? If this is not happening, probably it is. And I know Braiins and Luxor have been working here in Latin America. Maybe you can share your thoughts about that.
So miners and governments have to still work together. In so many countries now, they are working in a regulatory frame, like we see in Paraguay, in Venezuela. That's the way that we need to protect the investors, putting capital into the countries, working under a regulatory frame, make us a better bet for each country. I think they are already working on that in so many countries, especially in those what we are mentioned. Also, Argentina is a good market for mining, and I think they have to continue on that way.
Yeah, the framework I think about this is miners decide to invest in a country for a few reasons. One is definitely stability of regulation, and that's a really important piece. Second would obviously be electricity cost, and so with those kind of dual pillars, I think you can lead towards a profitable business, and that's why many miners have moved to the United States, because cheap, abundant power, at the same time stable rule of law, and so they feel like their investment's secure. Of course, that's very subjective. An investor in Argentina probably views investing in Argentina very differently than an American investor would that's never done business here. So it's about bringing in different investors too. One of the qualitative points that I think is often overlooked is just people supporting the industry. If you look at the hash rate growth in Texas, a lot of that is because people are beating their chest saying Texas is the best place to build mining farms. There's whole committees and people all over Twitter and other social media platforms that are saying that. And so I think really Latin America needs more advocates. It needs more panels like this. It needs more people on social media really pushing Latin America as a good place to build mining businesses.
Great. So have a couple of more questions. There has been a recent debate that it's still active and very common to hear in the mining panel, like this, which is the proof of work versus proof of stake debate, especially because of the Ethereum migration to proof of stake that you all know about. As you know, Rootstock is based on proof of work, so we are long-term supporter of this. However, there are like different voices in the space. I guess mostly proof of work supporters stating that POS is centralized, and POS supporters basically stating that the energy consumption of Bitcoin is very bad for the environment, and that Ethereum has reduced its energy consumption by 99%. What's your vision on this, like on the proof of work versus proof of stake debate, and if you feel like aligned with some of these voices regarding like proof of work and its energy consumption, and proof of stake and its centralized state, I could say.
Yeah, so around the energy part of it, there's a lot of like misinformation around kind of like energy consumption as a whole. If you see throughout like essentially human life history, energy consumption and like kind of GDP growth, it's pretty much tied 1-to-1. So like the more energy a society is able to consume in order to generate value, essentially that contributes to the flourishment of that society. And we can see that in pretty much any society around the world throughout the last hundreds of years of human existence. So like the first myth is energy consumption is not bad. What like miners are usually trying to do is the miners always look for the cheapest source of power. And this cheapest source of power is usually stranded energy that a society is generating but cannot like fully consume. So for example, if there's energy that is being generated in, for example, windmills that are far away from the city, and there's excess power, a miner can come in and essentially turn their machines on and off to be able to use that energy when the society is not using them. Like you see that at your homes where you have like different energy prices. So usually in the morning it's cheaper, and then in the afternoon and late at night it's more expensive. That means in the morning there's a surplus of energy because we are like in the streets working, and then we are all back home watching TV, doing laundry. We are using more energy, right? Usually energy generation is kind of like 24/7, pretty much the same, especially if you have like hydropower. So that means that in the morning we're essentially generating a lot of power that is not being used. So like a miner can come in, start consuming that excess power, which is essentially wasted energy, and help societies bring their power costs down, and also essentially help with the payback of their investments. Like building a hydro farm, like a dam or windmills, is extremely expensive. So like a miner can come in there and kind of like help bringing down the electricity cost and helping pay back all of these huge infrastructure investments in much like shorter time periods.
So this is like the mining view. I would like to bring the more like the Bitcoiner view of the proof of work versus proof of stake. So we can basically resume proof of stake in two words, like shareholders vote. As a Bitcoiners, we want to get rid of the human factor in the consensus. This is why we believe in proof of work instead of proof of stake. And also there is a lot of misinformation about the use of energy. They told us that they reduced the 20-point basis on the energy consumption on when we changed to proof of stake. But I read a lot of studies about that, and these GPUs they are not go away. They are mining other stuff, so they are more like 7-point basis. So it's not that less energy consumption that it looks like.
One other point that I like to discuss, because we run a mining pool, and I'm sure the Braiins guys can relate to this too, is there's a clear difference between proof of work mining pools versus staking pools, and that's a permission basis. So in the case of a Bitcoin mining pool, if a miner disagrees with the mining pool for whatever reason, maybe it's commercial, maybe it's philosophical on something like Taproot, they can immediately walk up to their machine and reconfigure that machine to point to a different pool. We don't control where their machines point. Whereas in staking pools, the vast majority of staking pools are permission basis, right? So you're staking your 32 ETH with somebody like Coinbase. If you disagree with Coinbase's view on the way the world works, you can't go and just remove your Ethereum and staking from them. You have to go ask them for permission first, and they could deny that. And so I think the mining pool and staking pool layer is a clear distinction on why there's an increased amount of centralization in staking protocols versus proof of work.
Related to that, Ethan, there is some community concern around censorship, right? And you know that mining pools have the ability to select transactions, right? And that's the place where regulators could come after very, very easily. At least today, I know there is like some innovations happening in that sense so that miners can select their own transactions. But today, the situation is this one. In Ethereum, according to what I understand, there have been a huge increase in OFAC-compliant Ethereum blocks, around 70% now on a daily basis. Do you believe we can see pressure from regulators on Bitcoin mining pools to censor transactions? And do you think it's Bitcoin better protected than Ethereum in this sense?
Yeah, I guess you still have somewhat the same risk. But like going back to like Ethan's point, the mining pool itself, although we are kind of like picking the highest transaction fees, so usually when we are building our block template, we look into our mempool and then we see how many transactions can we fit into this block, and then we are always selecting the ones that essentially pay the highest fee because we want to maximize our rewards for our clients, for our miners. So it could be a case where there's like a government that essentially knocks on our door and says you can no longer kind of like validate these transactions. But like at the end of the day, what like a mining pool is doing is essentially looking for like sending a job to thousands of miners all over the world and asking for a proof of work, which is like a hash function, right? So it's not that we are doing financial transactions or kind of like helping intermediate some transactions that might be seen like as OFAC censored or like whichever the framework is in the future. That's not exactly the same as with like proof of stake, because as Ethan was saying, most of the staking pools are permissioned where the pool operator, the staking pool operator has user funds, right? They are essentially kind of like a pure financial entity because they are taking custody of user funds and then using those funds to vote or to validate blocks on their behalf. So it's kind of like another extra step, which I think kind of like brings the regulator further into their house and kind of like more susceptible to regulation.
Yeah, I'd agree with that. I think proof of work is a little bit defensible in that nature, especially because the stakers are usually financial services companies, which are very highly regulated, versus miners are not. So that is, I guess, a bit of defense there. But I would say it is still a concern. And definitely as a US-based pool, it's something that we spend a lot of time thinking about from a legality standpoint. And so, in the case that the US government wanted to enforce OFAC-compliant blocks for American pools, that would obviously not be great because it's a slippery slope. They could go to, say, us and Foundry and say, okay, you can no longer include addresses or transactions that include certain addresses. Fortunately, there's very few transactions made by OFAC addresses in Bitcoin because usually when they get added to the list, they immediately spin up a new address. But it certainly wouldn't be great for like the overall like appearance of the network. And especially when you start extending the logic from mining pools, not including it, to then miners. And then eventually like the far extreme of that is you have to KYC every single address or transaction in the block itself, which would obviously kill the mining industry in the US. And so a lot of the work we're doing right now is with lobbyists in the United States, both at the state and federal level, to make sure that that's future doesn't happen, because what that will ultimately do is just push mining hash rate straight to Kazakhstan, Russia, Venezuela, and other places. And kind of the pitch to the American governments is really, do you want to have a seat at the table or not in this new global financial system? You're not going to be able to stop it. All you can do is stop it within your own borders. And so it's really important that regulators don't kind of start drifting towards that idea of, KYC and censorship of transactions in the block.
Yeah, on top of that, if you let me, Adrian, I want to add that most of miners are also, or Bitcoiners are concerned about the mining pools are controlling the Bitcoin network. This is why we at Braiins, we are working on the Stratum V2. I don't know if you are aware. We are switching. Instead, the pools sending the work to the miners. It's the miners that choosing the work, so it allows more decentralization. So I'm always open to work with other pools, and I think they will see all the, not only the economical factors in security and decentralization. So we are going to see the adoption of B2 in the next months.
Yeah,
I hope so.
Yeah, we are all very eager to see that happening. So last question, and we are closing, and this is about second layers, and of course Rootstock, but in general second layers. You know that when we designed Rootstock, it was very clear to us from the very beginning that the incentives had to be aligned with the Bitcoin ecosystem. Sergio explained it very well before how RSK can create an additional revenue stream for miners, especially in the future while the subsidy decreases. Do you think that sidechains or any type of layer 2 can generate an interesting additional revenue stream for miners? And additionally, if you think it can drive Bitcoin adoption, maybe share your final thoughts about these second layers.
Yeah, well, I think that's another area of FUD that we see a lot for Bitcoin, is that with decreasing emission schedule, that eventually no one will mine because it won't be profitable to make capital investments, build mining farms, buy machines and whatnot. Of course, largely it relies on the price of Bitcoin increasing for increased amount of security spend. It's also not black or white. That there's a point in Bitcoin's history where the emission on a US dollar basis was extremely low, yet there's still people that were dedicating hardware and electricity to go mine it. And so, I don't think it's necessarily, detrimental to the ecosystem if we reduce security spend in a US dollar basis. But it certainly doesn't help with hash rate growth, which is important for the network. So things like RSK, I think, are incredibly important for the longevity of increased investment in mining and increasing the security of it over the long term. We need to continue to find ways, and I think Dan talked about this earlier, build more on Bitcoin, right? You look at Ethereum mining and Litecoin mining, a large reason why people were investing dollars and infrastructure to mine those coins was because of the transaction fees and the MEV and the merge mine available to it. And so all of those applications are really important, I think, to longevity of increasing security of the Bitcoin network and the hash rate.
Yeah, and then to add to Ethan's point, layer 2s and kind of like side chains are incredibly important for adoption, because in all of these like side chains or layer 2s, you can be more flexible with what you built on top of Bitcoin. You have way more tools, you have more flexibility, you can build like more interesting products that are sometimes hard or sometimes even not feasible to build directly on top of Bitcoin. And that's also good, like something good that Bitcoin has, which is it's slow to move. It's a kind of like armored truck that you're essentially going to custody your kind of like long-term wealth. And then whenever you want to do kind of like day-to-day payments, or you want to execute smart contracts, or you want to do, I don't know, there's so many use cases on the RSK network, you can move a little bit of your wealth into there to essentially do your day-to-day stuff, to do more complex transactions, to work on smart contracts and whatnot. So that definitely drives the adoption of Bitcoin, and also helps Bitcoin kind of like fight and be on kind of like future parity with other networks like Ethereum, Solana, where they don't have those constraints that Bitcoin has. On the other side, Ethereum and Solana don't have the security that Bitcoin has. So, to wrap up, layer 2s and sidechains essentially give all of the features that all of these fancy, shiny new blockchains have, but with security and the stability that Bitcoin offers.
Yeah, we support RSK merge mining. Everything that adds value to the Bitcoin ecosystem and Bitcoin network, like the future smart contracts, for sure will add value when the subsidy of the blocks were cut. This is why we believe and we still support RSK.
Okay, guys, thank you very much. It was great having you here. So big round of applause to the guys.